Welcome to Trade Tales India. Today we will discuss why one should invest and where. Consider a scenario where an individual has a monthly surplus of Rs. 20,000 and is contemplating whether to invest or retain the cash. The individual is assumed to receive a 10% salary hike annually and expects a yearly increase in the cost of living by 8%. They plan to retire at 50 years old, leaving them with 20 years of working life. Not investing scenario. After 20 years of not investing and retaining the cash, the individual would accumulate approximately Rs. 1.7 crores. However, this amount would be insufficient to sustain their lifestyle during retirement due to the growing expenses and no additional sources of income. The money is projected to last for only about 8 years after retirement. Investing scenario. Alternatively, if the individual chooses to invest the surplus cash in an investment option with a 12% annual return, their corpus would grow to approximately Rs. 4.26 crores by the end of the 20-year period. This substantial amount provides a much more secure financial position during retirement. The information emphasizes the importance of investing to combat inflation, build wealth, and improve one's standard of living. It introduces various asset classes available for investment, such as fixed income instruments, equity, real estate, and commodities, precious metals like gold and silver. The returns and risks associated with each asset class are discussed. Fixed income instruments offer safety and moderate returns, 5 to 10%. Equity investments historically have higher returns, 12 to 15%, but they come with higher risks. Real estate investments can provide rental income and capital appreciation, but they require significant initial capital and may lack liquidity. Gold and silver investments are considered safer, but their historical returns have been relatively lower, 5 to 8%. It is important to note that risk and return are correlated. Higher returns usually entail higher risks, and it is important to strategize on asset allocation, wherein investors distribute their investments across various asset classes based on their risk tolerance and investment goals. Investing in the Indian stock market and various asset classes can be a lucrative opportunity for individuals looking to grow their wealth and achieve their financial goals. Here are several compelling reasons why one should consider investing in the Indian market. High growth potential. India is one of the fastest growing major economies in the world. With a large population and a rising middle class, the country offers tremendous growth potential across various industries, including technology, healthcare, finance, and consumer goods. As the economy expands, so do the opportunities for investors to benefit from the growth of Indian companies. Diversification benefits. Investing in the Indian stock market provides an excellent diversification opportunity for global investors. By adding Indian equities to your investment portfolio, you can reduce risk by spreading your investments across different geographical regions and industries. Diversification helps cushion against the impact of any one region's economic or political fluctuations. Booming startup ecosystem. India has witnessed a remarkable surge in startups and entrepreneurial ventures. The country is now home to numerous successful startups across various sectors, including e-commerce, fintech, and health tech. Investing in promising startups can offer substantial returns on investment, though it comes with higher risk. Demographic advantage. India's demographic profile, with a large and young population, indicates a potential consumption boom in the coming years. As more people enter the workforce and experience increased disposable incomes, the demand for goods and services is likely to grow, benefiting companies operating in the domestic market. Government initiatives. The Indian government has been actively implementing reforms and policies to encourage foreign investments and boost economic growth. These reforms, such as the introduction of the Goods and Services Tax, GST, and the Make in India campaign, aim to create a business-friendly environment and attract more investments. Growing middle class. India's burgeoning middle-class population is driving consumption and transforming the retail landscape. As more individuals move up the income ladder, there is an increased demand for products and services, leading to potential investment opportunities in retail and consumer-focused industries. Infrastructure development. The Indian government is investing heavily in infrastructure development, including transportation, energy, and communication. Such initiatives create opportunities for investors interested in sectors related to infrastructure development and construction. Historical returns. The Indian stock market has delivered impressive returns over the long term. While past performance is not indicative of future results, it does demonstrate the market's potential to generate wealth for patient and disciplined investors. Few case in points. Reliance Industries. One of India's largest conglomerates, Reliance Industries, started as a textile company and has now expanded its presence in various sectors, including petrochemicals, refining, telecom, and retail. Investors who recognize the company's growth potential and invested early have seen substantial returns on their investment. IT sector. India's IT sector has been a significant driver of economic growth, with companies like Infosys, TCS, and Wipro becoming global leaders in technology services. These companies have provided substantial returns to long-term investors. HDFC Bank. HDFC Bank, one of India's leading private sector banks, has been consistently delivering strong financial performance. Investors who had faith in the bank's management and growth prospects have been rewarded with remarkable capital appreciation. Startups. Indian startups like Flipkart, acquired by Walmart, Ola, and Paytm have attracted substantial funding from global investors and venture capitalists. Early-stage investors in these startups have witnessed significant gains as these companies grew in value. Remember, while the Indian market offers promising opportunities, investing always involves risk, and it's essential to conduct thorough research, seek professional advice, and diversify your portfolio based on your risk tolerance and investment objectives. Investing for the long term and staying informed about economic trends and market developments are keys to successful wealth creation in the Indian market. In case you find information useful, please like, share, and subscribe to our channel.